I bid you all good morning, good evening, and good night, wherever you may be watching this transmission. It is I, Mike Martins. Guys, I got a very crucially, very over-the-hill important article. It's not the whole fear porn. It's like legit. I need to get this out there, guys, especially if you've been following me for housing for many years. Guys, don't forget to subscribe to the channel, and don't forget to also set your reminders here for upcoming shows, Mike in the Nights and trends in the housing market. And man, do I have a trend that's going to start breaking homeowners apart that have to sell early because of what's happening. So I knew this was going to happen, and I should have made a video earlier discussing breaking a term, breaking your term on a mortgage, how actually heavily penalized you are when it comes to breaking your term, right? You have an amortization of 300, 200 months or whatever. Then you have a 4 or 5 year term. And when you break that term with the bank, they charge you, they make sure they tell you that, if you pay the mortgage off early, you have a penalty to pay. They kind of tell you that, but they don't tell you how much it is. I think sometimes they have to now. I don't know if underwriting is going to make it mandatory. So here it goes, guys. TD Bank charges $30,000 mortgage penalty to woman forced to sell due to the pandemic. Banks are poised to profit from customers who must sell in the coming months, a mortgage expert says. So this is coming from someone that writes up mortgages, underwrites mortgages, and sends them off for approval to basically tell us that, yes, this is very important. You need to understand this. So if you're in a bind right now and you say, well, I'm just going to sell my house is worth $100,000 or $2 or $3, even $1 million worth more than what I bought it for, you're going to have to pay a fine if you still have a term on it, right? So when the sickness hit Ontario, Mrs. K's income was, as a real estate agent, dried up, and she knew the writing was on the wall. She'd have to sell her house. She also knew there'd be a penalty for getting out of the 5-year mortgage with TD Bank earlier. She just wasn't expecting almost $30,000. I thought my eyes were going to pop out, she said. It's insane. A mortgage expert says that people who have to sell their homes and have fixed rate mortgages and are being hit particularly hard right now because of how the financial institutions calculate penalties, and he's calling on the banks to have some leniency. Well, I'm calling on the banks to have some leniency because this shouldn't be happening. A lot of people have actually today still have faith in their banking. Oh, my bank loves me. They know me there. Oh, my bank is that. The banks and the institutions will start losing that little faith that they still have from their, oh, my bank takes care of me. I need anything, I walk in there, they give me. They're going to lose those people. And when they lose those people because of stuff like this, yeah, it's going to get pretty bad. When you lose your income from a financial crisis like we're facing right now, you have to fork over tens of thousands to your lender. It's heartbreaking, said mortgage planner Rob, founder of ratespy.com, a mortgage rate comparison website and mortgage editor of rates.ca, and insurance comparison website. Check it out, guys, if you guys want to check out that. Mrs. B says she has considered selling her home before. She put it in the market in November. Then it took off when no buyers expressed interest. So she was at the right time. She was timing it right. You see? November. So this is before Christmas. The timing was right, but because the capital flows from China are almost zero right now, it's tough. It's tough to find a local buyer that can make that kind of money. A local Canadian that actually, like especially a born and raised Canadian with local education. Good luck. It's finding to buy anything nowadays. By mid-March, she says, selling her house became a necessity, not a choice. Almost overnight, the real estate agent based in East Gwemblebury, 50 kilometers north of Toronto, lost all her clients. People are not listing, she said, and nobody knows when the end is coming. Compounding her problems, 2 tenants who had been renting rooms in the house moved home to be with their families. Income from the mortgage helper Airbnb suite also dried up. Scrambling to look after her elderly mother, she lives with her and her 12-year-old son. The single mother says she started taking medication for anxiety. Their perfectly within their rights under the agreement, but we're in a pandemic, she said, and it's not selling this house because I love to move. I'm not selling this house because I love to move. So there it is. Article scan here to see the house. There it is. Nice, spacious, nice home. So Mrs. B requested a 1-month deferral on her mortgage, but she quickly realized that deferring it in any longer would just be pushing the debts so she could pay further down the road. She says she was fortunate to sell in April, just as the housing market started to plunge. Wait, did she sell? But she realized that deferring will pay the road. She says she was fortunate to sell in April. So did she sell there? No, she didn't. She was only 19 months into a 5-year mortgage with a fixed rate of 3.71% and still owed $591,000. TD used the controversial calculation to arrive to a penalty for breaking the term. She owed another $29,530. So all of Canada's big banks use similar methods for calculating what penalty people owe if they end a fixed rate mortgage early. Usually if they end a fixed rate mortgage early, if somebody comes along and offers them more than what they like, wow, you're offering me $1 million or $100,000 or $300,000 over asking. Okay, here you go. I'll pay the $30,000 to the mafia. Oh, sorry, the bank. I'll pay the $30,000 to the bank. Don't worry. It's worth the offset, right? I wonder if you could actually see. Canada's not like the States. You could take that $30,000 and offset it against any other capital gains, or carry it over a couple of years. So if you owe the government any money, you could offset it against what the bank is charging you. Then you see, in America, you could probably do that. In Canada, you cannot do that. So that's a huge issue. All of Canada's big banks. Okay, we said that. The IRD is a calculation involving the difference between the interest and the rate on the negotiated mortgage and bank's current posted fixed interest rate and the length of time remaining on the contract. Banks argue they lose anticipated revenue from their clients if they end the mortgage prematurely. So it's all about the banks making money. I don't think they care less if you own a home or not. It's about them making revenue, right? Right? And when the Bank of Canada lowers interest rates, the bank's posted fixed rates also drop, increasing penalties for people breaking fixed-rate mortgages. TD is profiting by collecting this ridiculous amount of penalty, which is only based on the fact that the interest rate proposed by the Bank of Canada is so low, which was done to help people, said Mrs. B. It's heartless. So they lowered interest rates because the cost of owning anything in Canada, we lost it. We lost the war to foreign investors. Foreign investors came in. Our government's like, $500,000 per year from China. Bring it in. Had the bank used the option of charging 3 months interest, Mrs. B says she would only have to owe $3,000. So the bank's not making money when she breaks the mortgage. So instead of using the 3 months interest that the government's charging, or the banks are charging, she would have to owe $3,000. So no, she has to pay $30,000, right? So penalties exceed losses. McAllister says a bank incur costs and risk when borrowing money to cover customers' mortgage, so they need to recover that lost income. But he says mortgage penalties often exceed their losses. Rest in peace. We have some church music playing in the background here. Man, it's gonna be hard for a lot of people. A lot of people are in this tough bind right now. With if they sell, what are they gonna owe the bank? What are they gonna owe the mafia? Right? What's the vig? Right? Most of the time, the mortgage penalties are bigger than they need to be. He said, "Of course they are." According to Mortgage Professionals Canada, 74% of all mortgages have fixed rates. TD Bank declined to interview a request. In a statement to Go Public spokesperson said that the bank takes care to make sure customers understand mortgage penalties and that Mrs. B was offered an additional 5-month mortgage deferral. The statement did not address why, after Mrs. B filed the complaint, the bank didn't negotiate reducing the $30,000 penalty, but say the bank had discussed options that were available to reduce the charge. So yeah, whatever. Mrs. B denies she was offered any helpful options. The bank also cited options, for example, deferrals and financial advice it is offering to customers hurt by the pandemic. So a lot of penalty shoot-ups. So this is a long time controversy. This has been going on. This is a very long article, really well written, guys. Here's the title to the article. Anytime I put a link in the description, the video goes nowhere. So let's go to article scan. If you guys want to find this video, it's called TD Bank Charges 30,000. It goes into more in-depth discussion. I just want to kind of talk out there and kind of throw a little bit of discussion for people that have broken mortgages in the past. What did it cost them? Was it worth their while to break their mortgage? Now, there's this sickness incurring all over the Commonwealth, all over. And Canada basically had to lower rates so the locals could compete and buy in with the foreign investing and the billions of dollars in money laundering, right? So Canada, if you just joined this channel, thank you for joining, because we like to go into actual facts here on the channel. So let's go back to article scan. Here it is. Canada would be in a recession without money laundering. So Canada's been laundering anywhere in excess to $200 billion through Canadian real estate, because it's Canadian real estate, because they're excluding typical layering intrigation process for money laundering. So the mafia does that. So the mafia would do that, open a business, layer the money, pay their taxes, and contribute back to the infrastructure. But this is being laundered through Canadian real estate via China through wealthy investors, and they were only allowed to investigate up to 2015, and they found $200 billion. The Liberal government basically shut down the money laundering that was happening in Canada investigations because they can't do that. So now with Hong Kong, so this is going to be not good for Hong Kong. So with Hong Kong separating and our government flipping in Canada, flipping the script and telling that Hong Kong is wrong, Canada wants more Chinese workers and students. You go down to the article here, they get 500,000. Let me just open this up here so you know I'm not making this up. Someone said I'm making up this article, and let's go down here. There's our great leader. 500,000 per year from China. And this is going to help our housing market, and this is going to help our economy go forward. And this is an older article from 2016. So I kind of wanted to throw this out there because it's actually a pretty big deal in what's happening with Canada. Now, the Canadian locals, or the locals that lived and born and raised or in Canada, living their lives, doing what they can to live, bought in competition with the foreign investors. You see, I bought a home. Everyone's, oh, well, Mike, you're telling people not to buy a house all these years. Well, the people that didn't buy are very lucky, because I paid $260 for my house, 2.5 hours out of Vancouver. At least I get 360 days of sun. We get a 3-month winter here, and March we're cutting grass. So I'm not too worried. The climate's good. I'm happy here where I am, surrounded by beautiful mountains. I take the roof off my car. It's great. But now, I bought in, but I bought in for $260,000. I did not buy in. For that same house in Vancouver with the square footage would be at least $4 million. The house I have here would be $4 million in Vancouver to properly raise a family with a nice sized backyard. Would be easily $4 million bucks. So let me know what you guys think. Banks are they're just gonna make any profit or any equity you built in. Banks coming for it. There's always somebody there to collect. Then if the banks don't want to do nothing about this, then the government should issue an allowance for people to offset any capital losses against any capital gains, and they're allowed to carry over any illegal, in my opinion, illegal bank fees. Even though it's in writing, still the situation is completely different and it's topsy-turvy. The banks should honestly... The government now should say, okay, then we're going to allow you any capital gains. You're allowed to expense any banking fines you obtain should be expensed any capital gains until it's completely wiped out, and then you can start paying tax again in big numbers, in big number tax. You know what I'm saying? So the government could help you this. There's many ways the government could help you with the tax system in favor to help people, but they can't do that because now with the capital flows of China almost at zero, it's going to be really hard. Hopefully, the Canadian government could appeal to the Hong Kong people and bring in more money to keep this going, because that's what they want. What I want, I've been wanting to see a correction for the last 10 years. Let me know what you guys think. Lots of love, guys. Comment below. And don't forget to subscribe and be part of the channel. Thanks for watching.